Block Energy is the production and development company focused on Georgia. It's released a trading update and given investors an update on a loan. I'm delighted to be joined by the Chief Executive, Paul Haywood. So, Paul, cash is king. The business has remained cash flow positive throughout 2024. Will that remain the case for the foreseeable future?
Well, Sarah, as always, thank you for having me. That is certainly the plan. As per our cash flow core forecasts out till year end and beyond, actually, the company continues to remain profitable, building a sensible amount of cash on a bi-monthly basis, in line with our lifting schedule, and remain financially very healthy. So, yeah, of course, as you've noted, we've recently extended the loan with the relevant participants, including myself. And as part of that process, of course, as you would expect, the third parties do take a deep dive on the financial health of the business, and the company's ability to repay that loan as and when due. So, very happy to keep the existing lenders in the loan, and yeah, looking forward to what this year brings for the company.
So, what's generating that sensible amount of cash? And would you describe any of your assets as a cash cow?
Yes, yeah, a cash cow, I guess, isn't quite the correct terminology, given the size of the company. But we've got a sensible headroom when it comes to meeting our obligations on a monthly basis, and ensuring we can maintain ourselves as a going concern. Plus, we're building cash in the background, which gives us the option to basically get back into drilling new wells, working over existing wells, and doing new things with the portfolio. So really, for a company of our size, it's really about retaining optionality over the various opportunities that we have across our portfolio, and we've done exactly that, and we can do that against a backdrop of a good performing asset base. We continue to produce healthy volumes of both oil and gas, and again continue to build cash. So we're in a very good place at the moment, Sarah.
I just want to talk about Project One and drilling there. No horizontal drilling on Project One, then, and why not?
Yeah, that's a good question. We took a view on the back end of last year to to basically hold off on horizontal drilling throughout the Project One portfolio, which currently offers us around 20 odd million barrels contingent resources, and plus or minus, and dials into the company's overall strategy of proving up resources, converting those resources to reserves to production, and obviously building a sustainable business. We made a decision to basically touch the brakes on drilling horizontal wells throughout Project One, purely because, well, first and foremost, our production base was of a certain level that enabled us to build an amount of free cash, and therefore fund the higher impact projects. And every well has its own specific risk. So we basically took a view that, right, production's of a certain level that pays the bills, builds the free cash. In parallel to that, we've been working up the various opportunities across the portfolio, such as Project 3, which is currently subject to farm out. I'm sure we'll get onto that shortly. And therefore, why take the incremental drilling risk on these horizontal wells that, quite frankly, have proven not to really move the needle in terms of an equities markets perspective? We've drilled and announced successful wells in the past. We brought on a couple of hundred of extra incremental barrels to the overall production base, and the equity hadn't really responded. So again, stripping it right back to the basics, is the juice worth the squeeze? Given all the various components that contribute to making these decisions. And for us, it was, look, right now we don't need to drill. Production's healthy. We got a significant project in Project 3 that requires some resources, both financial and obviously manpower. And let's get after it. Let's deliver that project, because, quite frankly, when we look across the portfolio, what's really going to deliver the transformational step for us? It's moving along a multi-TCF gas opportunity that sits on the crossroads of Europe. So it was a strategic decision internally, really, Project One remains a bona fide project, and is there sitting on the shelf. There are multiple drill candidates that we've fully worked up and are ready to go. But quite frankly, we don't need to drill additional wells at this moment in time. So we'll focus on what's important, and that's delivering Project Three.
Okay, so the juice isn't worth a squeeze, but let's use that word juice. Project 3 sounds quite juicy. As you said, the farm out process underway. What does this project possess, and who is or who are the interested parties visiting the data room?
Well, I'll start with what is the project first, and then I'll answer your second question. So it's a multi-TCF contingent resource project. It sits in the heart of Georgia, that's surrounded by infrastructure with pipelines that run through Georgia down into Turkey and can take gas produced within the Republic of Georgia into Europe. So you're surrounded by infrastructure. The volumes are significant, particularly for a company of our size. And most importantly, those volumes can be appraised and developed, given these volumes are located within a brownfield setup. So we have infrastructure, we have multiple wells that are re-enterable, et cetera, et cetera, et cetera. So essentially, very large project that can be appraised and developed at relatively low cost, certainly when benchmarked against other projects around the region. So, essentially that's the project, and we've defined that project as Project 3. We've had an independent contingent resource report delivered to us, which was announced earlier this year, that provides all the detail associated with that project, some of the highlights I've just touched on. Your second question, it's subject to farm out and who's looking at the project. Well, I would love to be able to share that information with you, of course, but as part of bringing third parties into our data room, there are strict confidentiality agreements signed, which obviously keep me from talking about that in a public forum. But what I can say is that that process is ongoing. It continues to move ahead as expected and as planned. We've got lots of different companies and parties currently reviewing the project. It's summer. So, as bullish and as aggressive as we like to be with our timelines internally, we are somewhat, being impacted slightly by the summer period, in that the key decision makers are out of the office at the moment. But lots of activity on that. Progress on farming out Project 3 continues to advance, and I look forward to giving you more details when I can.
I'm just wondering what the honey of the future is, because am I right in saying or thinking that the future of the company could be the CCS project, which has been described as Europe leading, which is a very punchy statement.
Yes, it is. Well, I'd certainly put Project 3 in that pot also, for all the reasons we've just touched on, right? But you're right, we've recently introduced a new project to the portfolio, and that's the CCS project. That project has been subject to a partnership agreement that's been signed with an industrial player in Georgia that sits within our license boundaries, that has a carbon problem, and wants us to assist them with dealing with that problem and cleaning up their operations, essentially. So, and therein lies the CCS project. The statement of Europe leading. Look, we've got approximately 140 million tons worth of storage available to us within our existing licenses. And we are exposed to an application that mitigates a lot of the key risks associated with developing CCS projects. And essentially, that's your injection, measurement, and verification process. What our stakeholders don't want in Georgia is us to inject carbon into our depleted reservoirs, and see that carbon leak somehow, somewhere, over the distant future. So ensuring that you've got absolute control over the seal and containment of that carbon is an important part of the project, and moving that project along. But we've got a very willing partner that's supporting us moving at a pace right now. We can run a pilot program under the production sharing contracts that we currently have 100% working interest in. The government of Georgia are being extremely supportive of us moving this project along. So again, it's another one of those, watch this space, Sarah. There's lots going on that project. We have the carbon, we've got title over the assets, we're working up the technology with our specialists. And again, we look forward to updating our followers on progress around that project in a not so distant future.
Just a couple more questions, Paul. Now, you've lent the business $115,000 that I'm aware of. Are loans for the business reliant on friends and family generosity?
No, no, not at all, Sarah. I mean, the loan was brought in to basically advance some of the strategic plans within the portfolio, right? And the company went out to the market. It spoke to a chain of different lenders that were offering all sorts of weird and wonderful products. Some of the products that we've seen some of our peer groups enter into, over the past, and quite often, though the headlines on some of these products look very sensible, if the world change, which it often does when you're a small, aggressively growing E&P company, there are some significant stings in the tails that can absolutely destroy equity value. Um, for that reason, once going out to the market, speaking to the various suppliers, we had a conversation internally with some of our key stakeholders, management, and myself, of course, and just said, look, this is what's required. Let's do it ourselves. So we did exactly that, and that was to basically preserve the equity structure, and more importantly, I think my contribution to the loan is obviously, I'd like to think, a reasonable tick in the box. But I am a significant stakeholder in the capital structure, and that position for me is far more meaningful than the loan that was recently rolled, I should say, but secured previously. So, I'm absolutely aligned with the stakeholders, and we all win by getting that equity price up, right? Which again is delivering on the strategic projects.
So, will your current market cap, however, prevent any further acquisitions if that's part of the business strategy?
Yes, look, that's a very good question. Clearly we're not happy, and we don't think we're being valued fairly at this moment in time. But you can speak to 10, 20 of your other clients in the small cap E&P space, um, and I'm sure nobody's feeling the love at these levels. I mean, even when you start looking at the largest, the top end of the small cap into your mid cap players. I mean, UK markets, certainly those playing in the hydrocarbon space, have witnessed a significant fall in inflow liquidity in general, which is having a detrimental impact on current valuations. But that's taken a snapshot of the picture today, right? I think, where we sit, therein lies a buying opportunity. And if we can get some momentum in the equity, and by delivering on our strategic projects such as Project 3 and advancing the CCS project, well then, down the road, 12 to 18 months from now, we could be in a fantastic place to go and pick up, some of these other opportunities that are, like Block, significantly undervalued. I think where we differ, certainly to our peer group, is we are cash flow positive and we are building a sustainable business. This isn't a science project for myself and the team. We're here to build a sustainable business and make commercial decisions along the way. So yeah, hopefully that pays off.
Finally, so 2024, it's the end of the calendar year is fast approaching. So, what might we be hearing about in terms of momentum and news flow?
Yeah, I think that the two key areas will certainly be, update on the farm out process, absolutely, and some progress around a pilot project for the CCS. Those are the two big ones we want to put to bed this year. There could well be some additional drilling across Project One, not the horizontal wells that we've been used to in the past, but we've recently identified some slim hole drilling technology that sees us drilling these lateral wells at a fraction of the cost that we previously experienced. So, where there may be a pilot program for some of that slim hole technology coming down the pipe, but the real meaningful ones for us are really delivering the farm out on Project 3 and advancing the CCS.
Very good. Paul Haywood, Chief Executive of Block Energy. Thank you very much indeed for joining us.
My pleasure. Thank you, Sarah.